Investing for beginners. Tips and tricks to help you get started. Why invest in the stock market? Understand the why before your first investment. Investing in the stock market is the best way to grow your wealth, and the choices of investments are vast. Choices such as stocks, bonds, ETFs, index funds, and gold, and many, many more, for example. Before digging in and learning how to invest, we first need to understand how the stock market works and what it offers. Each day there is a new offer of price, and the options change on a daily basis. When buying stocks or bonds, we're really buying a piece of a company, not a particular sticker or ticker or a piece of paper. The power of compounding is our friend, and the earlier you start, the better. Investing over the long term is the absolute best way to put your compounding to work. Albert Einstein, kind of a smart guy, once called compound interest the eighth wonder of the world and stated we should put it to work. Investing in the stock market helps you grow your wealth and is one of the best ways to grow your wealth for yourself and your family. Things to consider before starting. Key points to help you start the right way. There are many things that we need to consider before starting investing, and this should be done either by writing it down or putting it on a spreadsheet or a Word document or whatever works best for you so you can refer back to it from time to time. So there's several items that we need to discuss. The first being goals and time horizon. So before you start investing, you need to think about what it is you're trying to accomplish, whether it's saving for a home, buying a car, saving for your child's college education, or your retirement. You also need to think about how long you want to invest. If you're looking at something like retirement, then obviously the time horizon is going to be extended. Next, we need to think about risk tolerance. So your risk tolerance, you need to think about how volatile or how risky kinds of investments you want to invest in. For somebody like me who is a little more risk averse, I tend to gravitate towards things that are a little safer, and maybe the returns won't be as amazing over a short period of time, but over a long period of time, they'll be greater. And my biggest concern is being able to buy things that I'm comfortable with and that I know will grow and that I don't lay in bed worrying about every night. Warren Buffett and Charlie Munger like to say that they sleep like babies at night because they have no worries about their portfolios. And I think that's what I strive for as well. Diversification. Diversification is the idea of spreading out your risk among the different investments that you choose. Depending on what it is that you choose to invest in, if you are super bullish on, let's say, something like the tech stocks, and you put all your money in those and the stock market takes a turn down, then diversification could help you because by spreading out your investments, by having them in different assets, which means things like stocks, bonds, real estate, commodities such as gold or oil, currencies, different kinds of assets that are not correlated, which means they're not related to each other, then that helps you when there are certain sectors that get a certain beat down. A good example of that is the financial industry got a real beat down during the 2007 to 2009 downturn in the market. And a big reason for that was because the banks were hated. And it took a long time for those to recover. And if you had all of your money in financials, then you would have had a very, very difficult time during that period. But if you had spread your money out among different types of investments, then you would have been able to weather that storm much, much easier. The next thing we need to consider is fees. Fees are something that eat into your investments. So, for example, let's say that you buy something that has a 2% fee structure. In other words, they charge you 2%. So that's $2 on $100, for example. That may not sound like a lot, but when you consider that 2% is a hurdle rate that you have to get over to beat for whatever investment it is. And when you're talking about a 100-year return of the stock market of 8 to 10%, that can be a big hurdle to try to overcome. So avoiding fees is a huge benefit to long-term investors. You can do that with no-fee brokerage accounts that we will discuss later. You can also do that by reducing your tax burden. There's lots of different ways you can reduce fees. The next thing we need to talk about are retirement accounts. So this is something you need to think about before you start investing. So the easiest way to think about these there are two main types of retirement accounts. There's a traditional IRA and there's a Roth IRA. And the easiest way to think of those is Uncle Sam is going to want his cut of taxes at some point, no matter how you shake it out. And these IRAs are tax advantaged accounts in that they can help you avert any sort of additional taxes that you may have to pay. So a traditional, basically, you need to think of it this way. I'm not going to pay taxes on the money that I earn now. I'm going to invest that, and when I take the money out, I will owe Uncle Sam his cut of the taxes. A Roth is I'm going to pay my Uncle Sam's taxes now, and then when I retire and I take my money out of my account, I don't owe him any taxes. So it really kind of depends on what your tax situation is and what your time horizon is. Generally, the older you are, the more you want to look at something like a traditional, and the younger you'd like to look at something like a Roth. But those are just generalities. If you're concerned about your tax situation, obviously talk to a tax advisor or somebody that's much, much more versed in taxes. All right, so we've talked about some of the other decisions. We have 2 more decisions to make. So we need to decide on what kind of online broker we want to use. There are 2 kinds of online brokers. There's a full service and a discount. The full service broker provides portfolio management, investment guidance, and other services. The discount broker are 0 fee and help you execute your trades and provide education services. The last thing that we need to decide is what kind of investor am I? Before we can decide what investments work best for us, we need to decide what kind of investor are we. Are we a do-it-ourself? Are we need and want professional guidance? Or are we just going to use our employer benefits, whether it's a 401k or other employer retirement plans? Do-it-yourself means that you're going to handle everything and you want input completely on what happens with your money and your investments. You're willing to do the research and the portfolio management and maintenance and maintaining everything that you work for. Needing and wanting professional guidance, there's going to be fees involved in that, but if you have larger sums of money and this is not something you really want to do, but you know you need to do it, then that's a great route to go. And then obviously the 401k is, or any other employment benefit that you get, is obviously a great way to go. And you can obviously use the 401k and these other options as well. And you can mix and match as you need. By the way, if you have a 401k and the company offers a match, take it now. That's free money. Do not pass that up. All right, now we're ready to talk about some of the investments that we could choose. So here are some of the 6 best investments for beginners. Index funds. Index funds are funds that track different sectors of the market. Generally, they have very low fees. They are not designed to beat the market. They're instead to match the market. ETFs, very similar to index funds. They generally have very, very low fees, and they're also generally used to track different sectors or trends in the market. And ETFs are traded like stocks, so they have an individual price that you can buy and sell, and there is price movement on ETFs on a day-to-day basis. And you can buy these through your online broker. You can buy them through Vanguard. You can also buy them in your 401k. That brings us to the 401k. The 401k is an employer benefit retirement program. It allows you to add money to your retirement account through every paycheck. You can designate how much percentage you want. You can also choose which kinds of investments you want to have in your 401k. It's also professionally managed by generally an outside brokerage firm, and it's a great way to begin or start your investments. Robo-advisors are great for people that want to do a set it and forget it kind of investment where it's very similar to a 401k, where you can have them set up and they will take money out of your paycheck and they will invest it in a preset selection of menu items that you choose based on your risk tolerance, and then the money will be managed by an AI or a computer for you. Individual stocks, obviously this is where you are going to do it yourself. This is where you would pick and choose the different investments that you want to go into. You would choose any sort of diversification you'd want to follow, portfolio management, everything that's involved in picking and choosing stocks, a la Warren Buffett and Charlie Munger. Investment apps. There's a ton of investment apps out there, and it's just skyrocketing. There's obviously Robinhood, who I'm not a fan of. I would not recommend. They gamify investing, and I do not agree with their philosophy. There are other ones out there that I think are a better fit for beginners, Acorns or Stash. Both of those offer much more limited choices. They don't offer some of the gamification that Robinhood offers, and they're generally low fee or no fee, which are great places for everybody to start. Frequently asked questions, some helpful tips. Can I start with $100? Absolutely. You can start with as little as you need. That's one of the great things about investing now. With technology, they're offering things like stock slices. For example, Charles Schwab and Fidelity offer the ability to buy a company like, let's say, Amazon, which is trading for about $2,500 currently. You can buy $100 of Amazon if you want. You obviously don't get a full share, but you get a small slice of it. So that gives you an opportunity. You can also use that money to start a emergency fund. You can add it to your 401k. You can pay down some debt. So there's lots of different things that you can do with $100. What is the S&P 500? The S&P 500 is a collection of the top 500 companies in all industries in the United States. It's generally the benchmark that most investors compare their returns to, and it's referred to the S&P 500. Different styles of investing. What are they? Well, there's a lot of them, but the two main ones are value investing, which basically means that what you're doing is trying to find a company that's on sale, that's selling for less than what it's really worth. You buy it and you wait for the price to appreciate. The other style is growth investing, which is where you invest in companies based on their top line or revenue growth. And those are generally younger and more exciting tech companies, particularly in this day and age, that are kind of jumping out of the roof. So those are two different styles of investing if you're going to go the individual stock route investing. And with that, I want to thank you for listening. And to learn more, check out our website at the address below. Start today. Don't wait. You got this. You can do this.